Something big is happening in gold, and most people are looking the wrong way. The crowd is looking at the price. But the market is speaking through positions. While every eye is glued to fluctuating numbers, something else is silently shifting beneath the surface. Gold futures on the COMEX, it's not noise, it's positioning. Option structures are quietly betting on a price range that most would deem impossible. $15 minus $20. This is not a calculation born of euphoria. It is born after fear. The market has just undergone a massive shakeout. Prices were pushed up, then sharply reversed. A classic washout. Weak hands fell away, selling exactly where they should have stood firm. But the importance does not lie in that drop. It lies in what happened after. Positioning did not shrink. It expanded. Approximately 11.000 out of the money option contracts. This isn't luck. This isn't a lottery ticket. It is a structure. Risk capped, profit expanded. A deliberate bet. And positions like these are not accumulated in silence without a conviction behind them. The extreme price of gold is not because gold is getting stronger. It is because the unit measuring it is getting weaker. History has done this before. 1934. The US devalued the USD. Right pointing arrow gold went from $20 to $35. 1971 to 1980. The end of the gold standard. Right pointing arrow $35 to $850. This is not a price hike. It is a currency redefinition. And that cycle seems to return every few decades. Since 2020, paper money has been eroded. By the pandemic. By war. By energy. By endless bailouts. And as production returns, the system is forced to do what it knows best. Revalue the money. Look at the recent trajectory. Gold has traveled a long journey from the $2 range. It's not just speculation. It's a shift in trust. Away from fiat debt. Away from government debt. Away from the promises of central banks. And now? The price is moving sideways. Volatility is compressing. But long-term bets are expanding. That divergence is the true signal. The market never speaks plainly. It hides its intent in how the capital is placed. And right now, it doesn't look like a fever. It looks like a preparation. Retail investors react to price. Smart money reacts to structure. And if history teaches us anything, it is this. The biggest waves do not start when everyone is watching. They start when most have turned away. Stay alert. Do not become the exit liquidity for someone else. Blank. Blank. This is the introduction to a series. Not just about gold, but about the three pillars reshaping currency. 1. Gold, the primal currency. 2. BTC, the digital scarcity asset. 3. USD, the representative of fiat money. Where do we stand? Not at the peak, but on the upward slope of a long cycle. A curve that has already touched the bottom and is heading for the summit. An opportunity like this does not come twice in a lifetime. If you miss it, it's not just a few years. It could be 40 to 50 years. Tune in to watch the 90-episode series starting next week.